right? So there is no asset class in all of history that's ever performed like this, even with the drawdowns. This is why I keep saying to people, you just want to buy and hold them. And if you can make the right switch amongst the big ones as the next big network gets adoption, you'll make even more compound returns. Right? This is the biggest gift we've ever been given as investors. And it's the biggest macro trade of all time.
Don't forget to subscribe, traders. Let's continue with the interview to analyze it later and also comment on some of the most important news of the day.
When we talk about crypto, I use the charts of Bitcoin here because Bitcoin has the longest price history. It too is stunningly correlated with global liquidity. You see, Bitcoin has an 87.5% correlation, not as high as the NASDAQ, because, as you can see, it's the periods of outperformance that lowers that correlation. When we start to get, full kind of mania, crypto mania cycles that you get in this exponential asset, because it is a much more exponential curve, because it's driven by tech adoption. And we'll come on to that in a second as well. But you can see that liquidity is the driver of Bitcoin plus technology. But when I look at Bitcoin versus global liquidity, it's outperforming the debasement by 105% a year. I mean, that's a staggering difference versus global equities, which are not doing anything at all and are probably negative. That's a huge, huge difference in your future purchasing power, which is why this is such an important asset. And again, I'll come on to more of this in a bit. But we've ascertained that technology stocks are in a secular bull market. They're 97.5% correlated, but they've been rising very well over time. However, when you look at NASDAQ versus Bitcoin, this is a crucial chart. So NASDAQ is the best performing equity market in the world, essentially. But when you look at it versus Bitcoin, since this period of debasement, NASDAQ has underperformed by 99.93%. Just wrap your head around that. And it doesn't stop. It's underperforming by 45% a year. And as you can see, we're going to break to new lows, and this chart will just continue. As Bitcoin and crypto eat the world, it's something I call the supermassive black hole. I look at Bitcoin charts versus every asset, and they're all the same. They're all down 99.9 something percent. And then I look at relative values between Bitcoin and Ethereum, or Bitcoin and Solana, and that's where you get to choose what you think the fastest horse is. And that's why I chose Solana this cycle. But basically, crypto is the supermassive black hole, the asset that appreciates faster than anything else, and on a risk-adjusted basis too. So what's driving this? Well, what's driving this is obviously the debasement of currency, but why the other 105% excess returns versus that? Well, it's this chart. This is starting the internet at 5 million IP users and crypto at 5 million wallets, active wallets. So yes, I know that neither of them are perfect measures, but I'm not looking for perfection. I'm looking for understanding. And what we saw is the internet, which was the fastest adoption of technology the world had ever seen, it grew at 76% a year and then slowed down after year 8 to 43% a year. Crypto has been growing at 137% a year. It's now at 516 million users versus 187 million of the internet at the same stage. And then what we did is assume that crypto just slows down its growth to the same as the internet. I don't think that's going to happen. I think it'll be faster. But it gets by 2025, the end of 2025, we get to 1.1 billion users. So that'll be double the pace that the internet grew. And because this is a network and the tokens are at your participation in the network, they go up a lot. It's as simple as that. It's Metcalfe's law. So when you've got the biggest technological trend of any asset class in all of history, you're going to make a lot of money if that trend continues. This is why it's the biggest macro trend of all time.
In the dynamic realm of cryptocurrency markets, sentiment analysis plays a pivotal role in understanding investor behavior and market trends. Recent observations indicate a notable shift in sentiment dynamics, particularly concerning the ongoing bull cycle. Since March 14th, there has been a discernible decline in mentions of the bull cycle, even as Bitcoin, BTC, continues to reach record highs. This divergence between market performance and sentiment suggests a potential disconnect between investor sentiment and actual market conditions. A fascinating historical trend further emphasizes the significance of sentiment analysis in interpreting market movements. It has been observed that major price reversals often coincide with a reversal in mass traders' expectations. In simpler terms, when the general sentiment among traders shifts from bullish to bearish or vice versa, it often foreshadows significant market movements. This observation underscores the importance of monitoring sentiment indicators alongside traditional market analysis techniques. While price charts and technical indicators provide valuable insights into market trends, understanding the underlying sentiment can offer additional context and foresight into potential market shifts. By incorporating sentiment analysis into their investment strategies, traders and investors can better navigate the volatile landscape of cryptocurrency markets and make more informed decisions. In essence, the decline in bull cycle mentions amidst record highs for BTC highlights the evolving sentiment dynamics within the cryptocurrency space. Moreover, historical observations linking price movements to shifts in mass traders' expectations underscore the significance of sentiment analysis in deciphering market trends and anticipating potential reversals. By staying attuned to sentiment indicators, market participants can enhance their understanding of market dynamics and make more informed investment decisions in the ever-changing world of cryptocurrencies.
But it goes on. If we look out further using the internet adoption growth, and we slow down the trend rate of growth of crypto to the same as the internet going forwards, we get to 4 billion users by 2030. That's half the world's population. Now, will this be perfect? It's been pretty perfect so far. I've been showing this chart for 5 years now, but let's assume not. Either way, these numbers are simply staggering. And that's why you get that log chart of Bitcoin over time, because it's the adoption curve is what you're seeing, which is why the sell-offs, even though they sound terrifying, down 75%, are just blips in the overall trend. And over time, it just keeps compounding growth.
In recent years, Bitcoin has emerged as a transformative force in the realm of finance and technology. Its adoption trajectory has been nothing short of remarkable, often drawing comparisons to the early days of the Internet. Just as the Internet gradually permeated various aspects of daily life, Bitcoin is steadily gaining traction, albeit at an accelerated pace. When examining Bitcoin adoption, it's insightful to draw parallels with the adoption rate of the Internet. While the Internet took several decades to reach widespread acceptance, Bitcoin's journey has been markedly swifter. The exponential growth of Bitcoin adoption, fueled by advancements in technology and a growing awareness of its potential, mirrors the rapid uptake of the Internet in its nascent stages. Projections indicate that Bitcoin adoption could potentially surpass the milestone of 4 billion users by the year 2030. This forecast is not merely speculative, rather, it is grounded in the current trajectory of adoption and the underlying principles driving Bitcoin's growth. If this projection materializes, it would signify a watershed moment, with Bitcoin penetrating nearly half of the world's population. Such widespread adoption would not only underscore Bitcoin's status as a global phenomenon, but also have profound implications for the future of finance and commerce. As Bitcoin becomes increasingly integrated into mainstream financial systems and everyday transactions, its influence on traditional institutions and monetary policies will become more pronounced. However, while the prospect of 4 billion Bitcoin users by 2030 is tantalizing, it's essential to approach these projections with a degree of caution. Various factors, including regulatory developments, technological advancements, and societal attitudes, could influence the trajectory of Bitcoin adoption in unforeseen ways. Thus, while the future appears promising, it is also rife with uncertainties. In conclusion, Bitcoin's adoption journey parallels that of the Internet, albeit at an accelerated pace. The projection of reaching 4 billion users by 2030 underscores the transformative potential of Bitcoin and its growing relevance in the global financial landscape. However, realizing this vision will require navigating a complex array of challenges and opportunities in the years to come.